The Realty Debate with Manisha Natarajan, powered by Reliance Home Finance.
Welcome back to the Realty Debate on an important question buyers and investors are asking. Is property beyond metros a better bet? The slowdown has dragged down home real estate prices across India. And there's been a meltdown across the country. But the question is, has it been worse in larger cities than Tier 2 cities? And what really lies ahead for India's Tier 2 cities and towns, especially now with the government pushing big time for affordable homes, and from 1st April, you also have better tax benefits on home loans up to 35 lakh rupees. Now, because it's hard to club all geographies together, today we shall focus on key Tier 2 property markets of North India. So this is on our list: Jaipur, Lucknow, Chandigarh, Bhiwadi and Sonepat. And this is my panel. Pankaj Bajaj, MD Eldeco Infrastructure and Properties Limited. Amit Oberoi, National Director, Valuation and Advisory Services, Colliers International India. Neeraj Sharma, Executive Vice President, Sales, 99acres.com. And Sameer Jasuja, Founder and MD of Prop Equity. Now, let me look at some of the data which has come from Prop Equity, which will give us what's really happening. All of these markets, weighted average price between 2013 to 2015, if I look at the 2-year CAGR, it's not even 5%. It's lower than that. So other than Jaipur, which between 2014 and 15 did show a healthy growth, it's the price rise is absolutely below, I would say, even inflation. Good for the buyer? Don't know. We'll come back and ask the panel that. If you look at new launches, well, Bhiwadi is seen minus 70%, Jaipur has dropped by 28%, Lucknow 25%, and Mohali by almost 50%. There have been no new launches in the last 2 years in Sonepat. So clearly that market, no new launches. Total absorption is also down, but not looking much worse off than Tier 1 cities. So new launches going down, absorption going down is a story across India. Pankaj Bajaj, what's going on? I mean, the numbers only on the price rise surprise me. They look extremely muted. So are we to say that seriously don't look at Tier 2 cities at all?
On the contrary, that's the reason why you should look at Tier 2, the Tier 2 story, because Tier 2 story is a real story. It's not frothy. There's no bubble. And the absorption, as you have said yourself, is not down. So absorption numbers, I can talk about my company. In fact, they're higher than last year. I understand that there's some kind of consolidation.
Are you selling better in Tier 2 than you are in NCR?
I'm selling better in Tier 2 this year than I was selling last year. I think that's more relevant question to ask. So it's not that the market has evaporated. There is a inherent demand for in these markets. The prices have not risen. That's the reason why the absorption continues to be there.
Okay.
That there was some frothy demand in the Tier 1 markets. I think all of us know that. But that was never there in Tier 2. So it's a great time to buy. Choose your developer, and that goes. That cardinal rule is there even for Tier 1 cities.
Okay.
Choose your developer well, and it's a great time to buy. It's affordable. And the good thing now is that in Tier 2, the good developers will give you a product which is almost equivalent in terms of its specs as what you would get in a Tier 1 town.
Okay. Frothiness. Now let's talk about frothiness. There was a time, and correct me if I'm wrong, Sameer Jasuja, come in here. The Lucknow market was super frothy. You also, in fact, in our discussion 1.5 years ago in Tier 2 cities, there were people who were betting on Lucknow continuing to do very well. Jaipur was a market which was quite heated up as well. And maybe not in the last 2 years, but prior to that, there was a lot of investor interest even in Chandigarh and Mohali, wasn't there?
The Tier 2 cities that you're talking about are the capitals of these states. So these Tier 2 cities have a different, little bit of a peculiarity compared to other Tier 2 cities. This is where also investor demand comes in from all over the state, whether it's a Lucknow, whether it's a Jaipur, or whether it is a Chandigarh or a Mohali. So these have been primarily driven earlier in the last 2-3 years by investor demand, which is kind of dried up. That's why absorption numbers have definitely come down. Prices are not escalating anymore, and you're witnessing a good amount of slowdown. Yes, what Pankaj said, that the slowdown is not as bad as has been witnessed in tier 1 cities, but we have to keep in mind that the top 15 tier 2 cities after the top 10 top tier 1 cities is 20% of the top tier 1 cities. So the absorption anyway is very, very low, and there is genuine demand with such low numbers, and it will always be the case.
Okay. Neeraj Sharma, what are you seeing? I mean, is it the price point? What is it that is really keeping, let's say, sales going in tier 2 cities? Or is it just the fact that the prices haven't gone up in the last 2 years and therefore they become good buys now?
See, I think what has happened in tier 2 is when the market was opening up, there was a lot of oversupply, whether it's in tier 1 or tier 2. And I think when there was a lot of oversupply, there was all-round development happening in tier 2 cities. Now, when we look at tier 2 cities, the good thing is what they should look at is the price, right? They said you need to choose your developer, because there are a lot of good developers in tier 2 cities and prices are still very affordable. But because there are a lot of options available and a lot of developers and all-round development was there, so there is a lot of oversupply there. Only thing is you need to select the developer who's got potential to deliver on time and who has got the credential, and the price wise they are right. So if they pick up, it's a good thing for a consumer to get into tier 2 and get an affordable range of price at a good quality, with a good quality developer.
Amit Oberoi, is there still an excess supply in at least the state capitals that we are discussing, Jaipur, Lucknow and Chandigarh, Mohali?
Manisha, if you compare with, let's say, Gurgaon, Gurgaon used to do what, 24,000 absorption every year. It's down last year to about 12,000, which is 50% down.
Okay.
If I look at, let's say, a Chandigarh, Jaipur or a Lucknow, it's not down 50%. So let's clarify that. Number one, it's not 50% of what it used to be. Prices, if you look at Gurgaon, have been flat.
Okay.
Absolutely flat for the last 2 years. If you look at Mohali, it's flat. So what's different? There's no difference. The difference is that the base in these cities were very small to begin with. What is the population of Mohali? 2 million. What is the population of Delhi NCR? 20 million. So the number of apartments you were going to sell was anyways going to be less.
Right.
If I look at Lucknow last year and a half, prices have gone up significantly.
Really?
Yes. So prices have gone up compared, if you compare it with Gurgaon, Noida and other places, you will see, and Pankaj will correct me if I'm wrong, that prices in the last year or year and a half in Lucknow in his projects and others would have gone up by at least 5-6%. So that's pretty much par, it's just as bad or as good as what's happening in tier 1.
Tier 1. Okay. So then my question, the next question is, should tier 2 cities be simply for end use, which essentially means, Pankaj Bajaj, if you want to live there, buy it, otherwise forget it, because this is not an asset class which can be a part of your portfolio. I mean, if you already have a house to live in, a decent quality house to live in tier 2 city, why go and buy another apartment?
Shouldn't that be the case with all residential?
Oh yes, but then the market will not go up for another 3 years across India.
No, so
Pankaj, so that's the whole thing. Real estate is, and we've traditionally also argued for it, and I've been supported on this fact that it is one of your best inflation hedge product. And despite the fact that you might have a property to live in, you can still, in your asset allocation, allocate some amount to real estate. Now, if you have to look at an investor profile, are we saying don't bother with tier 2, because this is not a market, whether it's Lucknow or it's Jaipur, this is not a market which is going to give you anywhere inflation plus 3 to 4% returns.
I would agree with you with one caveat. That the numbers are speaking for themselves, that the CAGR in price has been less than the inflation, and that is generally the case all over so don't invest in residential real estate if your holding horizon is not long. If you're going to buy for the next 2-3 years, nobody can predict the market. Yes, there are frothy times, and you can ride the wave those times. But generally speaking, if you have a horizon for 8 to 10 years, 15 years, and that's the horizon I recommend if you're buying a house, it is a great bet, because in that 15-year period or 10-year or 8-year period, you're bound to hit some a patch of 2-3 years where it's going to be much more than 5%, and that weighted average over a period of 10-15 years is always more than inflation, and historically it has been 12 to 13% in India, and there's no reason to believe why it should not be, because it depends on a number of other factors. If you're saying that it's not going to increase even 5%, you're basically saying that India is not going to grow, people's affordability is not going to go up, jobs are not going to create it. Now that's a very negative call to take, and it is contradictory to what the pundits are saying.
So you're saying that if you were willing to hold on to 8 years plus, then you could actually you could actually expect 12% returns with
Yes, you
good
could.
real
Yes,
estate. Let me
definitely.
qualify here as well. You have to go with good real estate. Amit, do you really believe, if you look at investments and really the hotbeds of real estate, they've been very, very closely linked to office space development. And my question then is, how are these cities doing in terms of job creation and office space creation?
So you're absolutely right, and that's where it worries me. Job creation, employment creation is what worries me about tier 2 cities. They are still, for example, the three that we mentioned, Mohali, Chandigarh and Lucknow, are still dependent on the government sector or the trading community. Bhiwadi, Sonepat dependent on industrial manufacturing, which doesn't lead to too many white collar jobs. You need to have white collar jobs, you need to have the service industries. Chandigarh still has the Rajiv Gandhi Tech Park, but I don't see too much else. HCL has just got into Lucknow, there is Genpact and others in Jaipur, but not to the scale that you want it in a tier 1 city. So tier 2 cities will always have a much smaller base, market base will be much smaller as compared to a tier 1 city. But I still believe there are opportunities to invest in tier 2 cities if you have a good developer, and we are seeing a very clear segmentation in the market. Good developers and not so good developers. Even in a tier 1, even in a Noida, Gurgaon, Bangalore, other places, people are, good developers are selling, good developers are commanding a good price, but those who have not delivered, those who don't have a reputation are not selling. As simple as that.
In Noida itself, you've got one developer whose projects are completely stuck, still not being able to sell or resell at 2100, while you have another developer adjoining who's selling at 4200 because he's been delivering. So that will remain. Sameer Jasuja, what really happened? Remember when we started the property show 3.5 years ago, this entire story of Ajmer Road and Jaipur was so exciting, and today I know for sure that Mahindra is looking to actually sell off their assets on that road and the big city that they built there. So what went wrong with this entire IT BPO story of at least the state capitals like Jaipur?
Manisha, I think the first part is that, what went wrong with the tier 2 cities with respect to IT growth. I think there was a slowdown in the world economy. The second part was the top 5 IT companies, if you look at it, in the last 2-3 years have just not grown at all, I would say. Lastly, that there's been enough talent that has been available in tier 1 cities, so tier 2 cities really never got a chance. But one more very important point that I'd like to add with respect to the real estate scenario in tier 2 cities, and of course with respect to tier 1 cities also, that for the first time in India, demand-supply dynamics are playing the biggest role, because initially till 5 years ago, the supply used to be much lesser than the demand really, and over the last 5 years, there's been a lot of land that has got released, licensed land that has got released by the governments across the country. That has led to a lot of developers with FDI in real estate coming in, given them a lot of money where they've gone and bought excessive land banks. And that's what has, for example, happened with Mahindra, the example that you've given, that they bought in 500 acres. Now that's enough supply for the next 25 years for Jaipur. And they've just suddenly realized that, real estate is just not, sales just don't happen on spreadsheets, they have to happen in real terms. And the annual absorption of any city is not that high, especially in tier 2 cities, and with the economical slowdown and real estate slowdown, it's even become 1/3 of what they were projecting in the worst case scenario. That's been the real problem, and that will continue to drive lesser appreciation or hardly any appreciation going forward. And to top on that, besides the additional land that got released, now governments are going out and giving additional FARs on the same land.
Right.
So that is going to reduce the cost of the land even further, which is fantastic for the consumer. Like Pankaj pointed out, that if you're looking at an 8-year scenario, this is going to be probably one of the best times for you to buy, because cost of construction is going higher and higher, and cost of land is not that high anymore when you're buying into a property right now. Plus, with the smart cities coming into the country, and 15 out of the 19 cities that we covered, and all the cities that you're going to be talking about in the north, south, and the west region are going to be all smart cities going forward. So there's going to be a lot of infrastructure initiatives that will be taken with respect to these tier 2 cities, coupled with the fact that land prices are going to go further down with additional FAR. I think the supply will be a lot, but yet there are good opportunities in these tier 2 cities over a long-term period.
Okay, so this is what I'm hearing. This is really the beginning of a party for a buyer. Am I wrong? Amit, come in here.
Absolutely right.
There's land, there's increased FAR, there are developers who have to continue to compete and deliver good quality, because if they don't do it and deliver it in time, they're not going to get buyers back. And for the first time, prices are not going up, and excess supply is going to keep the prices down for a long time to come.
I couldn't agree with you more. So, very simple philosophy: you invest or you buy property when the markets are low, you sell when the markets are high. As simple as that.
Is this the time to buy? In tier 2,
look,
any of the cities that we saw, and we are talking about North India, let's get specific.
Okay.
Would you be able to take a bet with any of these cities for 5 years, saying if I buy today, because even if it's an end-use decision, Amit, people do like to, this is the largest life saving. They do need to see it appreciate. It is something that they fall back on for a rainy day.
So, out of the 5 cities that we mentioned, I'd go with the bigger cities because the base is much bigger. The market is state capitals. I'd stick with them first and foremost, because there are multiple avenues for employment generation in these cities. Point number 1. And what I've said is a much larger picture. We are talking about this being the low market. I can't predict, no one can predict when the market is going to start going down. Is it the lowest or not? But it is pretty low. And what I'm seeing, the indicators that I'm seeing in the market are, for example, let's say you mentioned when you started off saying there has been no construction for the last 2 years, right? There have been sales in the last 2 years, therefore the overhang is coming down. Therefore the gap between supply and the demand is coming down. Unsold inventory is coming down in most cities.
Okay, fair enough.
Which is a good thing. And when it reaches a certain critical juncture, prices will start going up. I don't know whether that will happen in 12 months, 18 months, 24 months. I really don't know. But I believe this is a good time to buy.
Okay, Pankaj Bajaj, when will prices start looking up? Because you also, when I'm going to developers' offices, I'm hearing another story. There was a time when most developers went through this thing of, we want to create luxury and super luxury. Then came a time when they said premium and middle segment homes, and now you have a budget which has actually given you a new segment and said, well, if the house costs you 50 lakhs and the home loan is 35 lakhs, then guess what? You get extra tax benefits, which means there should be another spur in demand which developers are getting ready for. And tier 2, is that where you will be building? So are we going to see a surplus of supply coming again?
So pricing has become realistic. The house sizes have become realistic. I don't think specs have been brought down by the developers to bring down their cost. If anything, specs are only going up. The specifications, the quality.
Extra FAR, does that not help you reduce the prices?
Yes, of course, it helps us reduce the prices, and that's what you're saying in markets across the country, and that's what Sameer mentioned. That brings excess supply into the market, and the developer is able to amortize the land cost over a larger area. It's as simple as that. So pricing has become realistic. Density norms, which is something which the developers are always seeking more of with the government. For some reason, they always have very low density norms, and they want it to be a very less dense kind of development. They have been relaxed all over the country, allowing developers to build smaller houses and the ticket prices to become realistic. So prices have become realistic, but I will disagree with you on one point, that there is not going to be any appreciation, and it's going to be flat, and it's going to be weighed down by the excess supply. You are seeing it across all markets, including tier 1. Somebody mentioned Noida. There is a differentiation which is happening between good projects and bad projects.
Okay.
When I say bad projects, I mean projects which have nothing to show for them, which are just average.
But Pankaj,
they get delayed.
Mentioned that point. I gave an example of one project selling at 2100 and adjacent project selling at 4200.
You mentioned Noida. The same is true for Sonepat. The same is true for Lucknow. The same is true for Mohali. I can give you an example. I don't want to take names of projects here, but in Sonepat there would be projects which are selling at.
My question is, they're already
50% premium.
But
50%
going forward, what happens? So I guess the strange
there will
question
be such projects.
is, can you go cheaper? if there are certain policy changes, Pankaj, would you be able to offer homes cheaper, or do you think that there's no scope for you to be able to offer homes cheaper?
I think the lackluster absorption numbers, if any, are not a function of high prices today. I don't think that is the question. I don't think it's a question of, which was the question 2 years ago, that can people really afford these prices? I don't think anybody is asking that question anymore.
No, we are not asking that either. We are asking you, can you go cheaper?
I guess yes.
You can.
Yes, you can go cheaper by increasing the FAR and the density even more, but there's a limit to what technology can achieve. So I think we are at the lowest in terms of construction costs. As Samir mentioned, the construction cost is only going to go higher, and even the land cost amortization beyond a certain FAR, it's a hockey curve. It starts going up because if you have 5 FAR, then the cost of construction rises exponentially. So I think we are almost at the cheapest, but if you unleash more supply, and there are more licensed areas which come into the master plans of all these tier 2 towns, it's going to be even cheaper. But I guess, I don't know, but it will be self-correcting, because I don't think too many fresh starts or housing launches will happen then, because it's not going to be viable for the developers to launch.
Okay.
So I think we're almost at the bottom now.
Almost at the bottom. It's difficult to predict, but you've been very, very upfront saying that yes, I mean, if the government releases more land, if there's more FAR, it can get cheaper. Final question, Neeraj, you're actually feeling and sensing what the buyer wants. Amongst these top cities, where are you seeing real demand?
See, what we can see is, I think the cities like Mohali, Lucknow and Jaipur, all three are good. I think city where there are a lot of job opportunities, for example, Mohali, there are a lot of job opportunities, infrastructure is there, international airport is there. We see there will be some kind of a demand which will still continue. But in all these 3 cities also we need to be careful that which is the developer we choose and where is the exact location, because when we talk about certain locations, for example in Jaipur we talk about Tonk Road, in Lucknow we talk about Sitapur Road, Rai Bareli Road. It's an entire road which will go till 20-30 kilometers. You need to be very careful when you select a location also of a particular project and along with the credential of a developer.
Okay.
So if you pick up all that, I think consider these 2 things. I think Mohali, Jaipur, Lucknow will be a safer bet. If you have, again, what as Pankaj suggested, I think if you've got a 8 to 10 years perspective, I think you'll get a good returns out of it.
So 8 to 10 years perspective, that's what you need to keep. You also need to choose your location very carefully and stay with the state capitals, because at least the governments there will fight to do something. Because remember also, we're in an election week. This country is becoming so federal that you will soon have governments competing with each other to actually make their state, and at least state capitals, the best. End user, that's the market which remains today. Gentlemen, thank you very much for bringing us these insights. Pleasure to have you with us. And thanks to all my audience and viewers for joining me on the Real Estate Debate. I'll see you again same time next week. Goodbye.